Hello and welcome to the Her Retirement Podcast. I am your host, Lynn Toomey. And here in my podcast each week, I talk about how to live a better, more intentional, and financially secure life now and in retirement. Whether you're single, suddenly single, or a partnered up woman, your only sure investment is an investment in yourself. And financial wellness, also known as financial security, isn't just a dream, it's a decision. And when you decide to make a commitment to yourself and change your financial destiny, our fresh, modern platform will help you know more and have more now and in retirement. Welcome to Her Retirement. Welcome to my Know More, Have More financial wellness platform, and welcome to my podcast. Are you ready to get her done? Let's do this. So hey there, welcome to this week's episode of the Her Retirement Podcast. I am recording this week's session from my phone because I have moved, and for some reason, the boxes containing my microphone setup are MIA. So we're going to have to make do with the recording the old-fashioned way on the old-fashioned iPhone. So thanks for hanging in there and listening to this week's episode where I am talking about separating the signal from the noise. What kind of role can a financial advisor or a financial professional play for an investor like us? Well, you know what? The answer is an important one. And while the value of such a relationship is hard to quantify, the intangible benefits may be long-lasting. You know, there's certain investors who turn to a financial professional with one goal in mind, and we call that the alpha objective of beating the market. But even Wall Street's brightest money managers can often come up short. And by alpha, we simply mean the return above a given benchmark. And that's what we all want. We want a higher than the benchmark return in the stock market. But at some point, us investors realize that their financial professional really has no control over what happens in the financial markets. My significant other has been a financial advisor for 35 years, and his clients actually know that he has no control over the markets, but some people still expect him to have a crystal ball. What we can do as investors in this wild stock market, sometimes it's a wild ride, sometimes it just is quite the bull market, quite the bear market. But what we as investors can do is we can only control what happens on our side of the table. And guess what? We do have some things that we can do to control our side of the table. It all comes down to a few things. But one thing that investors do is they come to understand that the real value of a relationship with an advisor is really about strategy, coaching, and understanding. And a financial professional, the right financial professional, can provide guidance about today's financial climate. They can help you determine your objectives, and you know what? They can assess your progress towards these goals. And alone, as a sole investor, let's say you're doing it yourself, you may find it difficult to do any of these tasks. In addition, an investor can sometimes make self-defeating decisions. So we make like knee-jerk reactions. We see the stock market fall and we go, oh my gosh, and we panic and we get out of the market. And that's been proven over time to be very detrimental to long-term success. You need to stay the course. You need to stay invested. You know, you can move some things around, but you know what? It's really not a good idea to make those knee-jerk panic reactions. What you can do, however, is look at your goals and your strategies and make adjustments. Perhaps you're getting closer to retirement. Well, maybe now is a good time for you to think about how to lock in some guaranteed income sources from your portfolio proceeds. All kinds of things like those things can help, especially as you approach retirement. Investment advisors, for the most part, do a good or great job helping you grow your money. But when it comes time to distributing from your portfolio, investors, us lay people, we need more help because it's not just about growing your money any longer. There's all these other considerations that need to come into play as you start distributing your money. There's so many decisions you need to make in addition to how you invest in retirement. And you know what? Today's steady stream of information, like our access to information via social media and TV and radio and you name it, wherever you get your information, it can prompt emotional behavior and it can lead to blunders. You know, we kind of, information can be our friend and our foe. And I want everyone to realize that no investor is infallible. Investors can feel that way during a really great year, right? Investors can feel, I'm infallible, and have for the last 10 years. We've been riding this amazing bull market high. You know, we feel this infallibility when every decision seems to work out well. But guess what? Sometimes overconfidence can set in, and the reality that the markets have challenging years can be forgotten. And then all of a sudden we get a slap in the face like that's been happening the last couple of months, and reality sets in and we realize, you know what? We're not infallible, and this isn't always going to be a bull market. We get a little overconfident. You know, some people say we get fat, dumb, and happy. Whatever your expression is, we just forget that, you know, over the course of 10 years, when we've had this incredible bull market, we forget that the market can go down, and it's a hard pill to swallow. But guess what? A financial professional can help us investors commit to staying on track. And through even subtle or overt coaching through an advisor, an investor can learn to take short-term market volatility in stride and help us focus on the long term. And a strategy with an advisor is put in place based on your goals, your risk tolerance, and time horizon. And sometimes as individual investors or DIY investors, we don't take all of these things into consideration. And then we don't have the sophisticated tools to screen all the investments, and we don't have the time to look at all the investments and all the different strategies out there. It's not just, you know, a stock bond portfolio. In fact, that kind of portfolio is probably not a great option in this type of market or as you approach retirement. And as the investor-professional relationship unfolds, an investor will begin to notice the intangible ways that a professional can provide value. And this professional can help explain the subtleties of investment trends and how potential risk often relates to potential reward. They can really help you connect the dots. They can help you focus on other parts of your life. You know, if you trust the person and you come to trust them and you feel confident and comfortable, that gives you so much freedom to go and do other things in your life, knowing that someone who's really good at it has your back, and they're going to keep you invested for the long term. They're going to keep you on track for the long term so that you can go off and do other things, knowing that your money is where it's supposed to be. Perhaps most importantly, advisor. I like retirement advisors for people approaching retirement, but a retirement advisor helps clients get past the noise and the buzz of the financial markets to see what is really important to your financial life. So you can also kind of shut it out. You can say, you know what, someone else is worried about it. I don't even have to listen to it. I don't have to watch it. I can just do other things. And over time, an investor is going to gain a new level of understanding, a context for all the investing and saving that they're doing. And the effort to build wealth and retire well is not merely focused on success, but also significance. A financial advisor, or better yet, a retirement advisor, can help pre-retirees really focus in on their investment strategy, a strategy that will yield the most sustainable and efficient income in retirement. That's the whole goal, right? You're building this nest egg. You're investing in this nest egg to, at some point in the future, give you that financial freedom date and allow you to retire and start drawing income from that portfolio. And there are ways to make it more sustainable and efficient. And a retirement advisor versus just a straight up investment advisor will know those strategies to take that nest egg and make it super efficient. There are some very unique strategies for making it more efficient and more protected from the volatile ups and downs of the market. Like the traditional 60-40 stock bond portfolio or a portfolio that's too heavily weighted towards stocks, like maybe 80%, may not be in your best interest. And if you'll be relying on this portfolio to give you an income for life, you may need an advisor who can help you de-risk that portfolio. So as you approach retirement, you want to remove some of the risk because you can't be depending on a portfolio that's going to drop 30% in a day. And perhaps this person can help you create what I call a personal pension plan. So from your portfolio, you can create your own personal pension plan. Many people don't have pension plans these days, but you can roll your 401k over, create a personal pension plan, which is a guaranteed income stream for life that's protected from market volatility. And a personal pension plan protects you from market losses while also providing you some growth. The right plan doesn't eliminate all the growth opportunities. There's still growth opportunities, just not as big, because with bigger growth comes bigger risk. Okay, so if you can accept lower growth but a guaranteed income stream, then this might be an idea for you to consider. But guess what? Finding an advisor who knows what he or she is doing with investments and retirement planning can be a challenge in the sea of 300,000 advisors out there. And a lot of them, most of them, have been focused on growing people's portfolios and not necessarily on retirement planning. They're two different disciplines. It's like going to two different medical specialists. They aren't necessarily compatible or they're not cross-educated, if you will. But there aren't nearly enough advisors who help people start distributing their income from their portfolios. It is a different discipline, different set of strategies. So you need to make sure that the person you are talking to as you approach retirement is retirement trained, okay? Very, very important. And for us women, it's a known challenge to find an advisor who provides us a judgment-free zone and allows us to ask a lot of seemingly silly questions about our money and retirement. No one should make you feel like I'm asking a silly question. Also, we women have sometimes some shame about our money or lack thereof, or our lack of knowledge about investing and portfolios and all of this financial talk. It can be overwhelming, but and quite honestly, some of us feel shame about where we're at, that we're not far enough along, or we didn't do the right things, or we don't know the right things to do. But the right advisor will not make you feel judged or shamed. They will give you that comfort zone to ask those questions, to get confident about your money, and to help you understand your money and these strategies. There are many good advisors out there who have the patience, knowledge, and empathy for the unique concerns and challenges we women face. And I implore you to keep digging until you find that person. I'm going to be running an investing workshop to help women understand the basics of investing and how to invest for retirement. I'm also going to be providing some direction on how to find the right advisor, depending upon your place in life or your phase of life. This will be an education-only event because I am not investment licensed. I do not provide investment or tax advice. So please email me at lynnt@herretirement.com if you or you know of someone who would like to be informed when the workshop will take place. I have to get all moved into my new home, and I've got a bunch of stuff, obviously, going on in my life with a big move, but I'm going to plan that workshop very soon. And in the meantime, if you have immediate worries or needs about your portfolio and the current markets and economy, I can connect you with my significant other, Brian Saranovitz, at Your Retirement Advisor. He knows investing, he knows retirement, and he's helped many people, many women, feel more confident and comfortable about their portfolio and their income in retirement from their portfolio. Now is a really good time to seek out that peace of mind and to be assured that the market is going to return to normal. It will normalize. It always has. On average, it's returned 9% over time. It's just, for many people stressed about the ups and downs of the market, economy, inflation, now is not the time to panic or pull all of your money out of your 401k or to stay away from investing altogether. Some people are like, oh, I just want to put my money in the bank. Not a good idea. Stay calm, stay the course. And as my mother has always said, and my daughter has this tattoo, this too shall pass. Thanks for listening. And remember, you can know more and have more. Her Retirement is here to help. Also, remember, procrastinating on your plan for retirement or burying your head in the sand is not in your best interest. Make a plan, take action, and get her done.